Kohrs, you didn't raise no bitch. Working hard without a hitch. Got my money in the stock game. Praying for good old DJ fame. Crying in the shower at night. But those tears, they shine so bright. Warrior tears down my face. In this life, I run this race. Mama Kohrs didn't raise no bitch. Oh, didn't raise no bitch. Mama Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch. From the morning to the dusk, in the numbers I do trust. Broker calls and market shifts. Hard work gives me endless gifts. When the night falls and the tears start, that's the time I show my heart. Fighting battles day and night. Oh, mama's strength is my true light. Mama Kohrs didn't raise no bitch. No, didn't raise no bitch. Mama Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch. Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch. Mama Kohrs didn't raise no bitch.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where it's a beautiful Thursday, August the 20th, and things are a wee bit red. S&P 500, NASDAQ, Russell, not looking the best. Walmart getting destroyed, but for my crypto bros and crypto gals in the audience, things are very, very green. So if you're watching Bitcoin, if you're watching Coinbase, if you're watching MicroStrategy, congrats to you. If you're watching pretty much anything else, not so good. If you're wondering why things are not so good, well, Walmart did not have a good earnings. That's for Walmart. For the rest of the market, basically all that intervention we saw from the administration, specifically Bessent, saying, hey, we're going to buy those 30-year bonds. We're doing a buyback program. Don't worry about the long end. We're going to be fine. The market thought it was fine yesterday, not so much this morning. So we're going to be breaking all of that down, what's happening, the overall market, the bonds, Walmart, Bitcoin, and in between that, we do have some important stories on the geopolitical scale that we should quickly cover, just because sometimes I like riling you guys up with political statements, but also more importantly, it could have a gigantic impact on the market. We have an update of what is happening in Iran and the economic destruction that Trump will allegedly be, I guess, instilling in the economy of Iran. We're going to talk a little bit about tariffs, and then we have some clips to break down, and then we're going to get into some individual news and obviously like just market updates and the hot news for the day. So we're going to start big, and we're going to get smaller and smaller and smaller until the market opens. They're going to let us, the DGens, into the world's largest casino, and then because we're all wearing lucky clothes, we're going to make a bunch of money, and then we're going to call it a day. I hope that sounds good to you. It sounds good to me. Piper's right here. It sounds good to her. We're going to break down these stories. We're going to make some money. We're going to drink a lot of coffee, and then we're just going to move on with our lives. So I hope that sounds good to everyone. Whether it does or it doesn't, make sure you smash that like button. So if it sounds good, destroy the like button. If it doesn't sound good, let me know by murdering the like button. That'll really prove me. You'll really show me if you end up pulling that one off. So like, subscribe, turn on those notifications. And with that being said, let's get right into it. The S&P 500, it is red. Gained 0.2% yesterday, currently down 0.4%. So it was fine up until about 7 a.m., and that's when we saw a little bit of a spasm in the bond market, bonds going up, or bonds going down, yields going up, and the market took a bit of a hit. On the Nasdaq, similar situation. Yesterday, lost 0.2. It's down an additional 0.5 today. Walmart missed on earnings, lost 0.8 yesterday, gapping down by 7%. And then Bitcoin is ripping, trading at 72,000. No, if you've been paying attention to Bitcoin recently, you did not hear me wrong. 72. I'm not saying 62. We're a whole $10,000 higher. Yes, it is trading at 72. And we'll talk a little bit about the 4-year cycle, but really the recent pop in Bitcoin has to do for some political updates, aka the Clarity Act. So, of course, I'll be breaking all of that down. Bissett leans into his role as America's bond trader-in-chief. Treasury Department signals willingness to intervene after yields hit nearly a 2-decade high. So, we talked a little. I got to sneeze. Oh, my God. Hold it in. You're better than this, Matt. I am the master of my own body. You don't have to sneeze. You don't have to sneeze. Come on, hold it in. You know who else sneezed? Hitler sneezed, and you're not Hitler. Come on. You're the master of your own body. You're the master of your own body. You don't have to sneeze. Hold it in. Hold it in. Okay, I think I'm good. I think I pass. I think I am, in fact, the master of my own body. So this news was kind of picking up steam over the weekend, a little bit into the week, and then over the past 2 trading days, that's when we said, oh, okay, here, let me show you the SPY. Let's go to the 30-minute. That's right here is when you kind of saw the impact of it of like, okay, we have the U.S. government basically backstopping what's happening with bonds. That's good. Bond prices, this is the 20-year, even though they were involved in the 30. Bond prices got a nice pop. Yields obviously coming down. Let's go to the 10-year yield. This is going to be the most important. Yesterday, the past 2 days, yields getting a breather. But unfortunately, now you're seeing a very quick turnaround, a very, very quick turnaround. So it worked for a little bit. Right now, the market is saying, you sure about that, brother? Obviously, time will tell. Dollar risks becoming biggest loser from the U.S. bond buying. So let's go back to the old trusty yen. Remember, as this goes higher and higher and higher, not so good. On the announcement yesterday, okay, it started to continue to trend back down. That's good, but you could see a little bit of a pop here. And remember, the way our dollars are made, the economy is made, the dollar's always going to be losing value. It's just a question of what's value is it losing on a relative basis, and also not only to other currencies, but to itself, and how quickly is that happening. So right now, the market is not fully buying what the government is currently selling, but we're going to see if this is a little just Thursday fluke, or we're going to see if it's actually worse. All right, so let's get this one going. Can the U.S. successfully battle rising borrowing costs? Remember, this is all very important with the backdrop of monetary policy. Recently, we've gotten a mixed bag in the labor market, but overall, it's still decently strong. And this is important when you're looking at the labor market and also considering inflation, which inflation, the magnitude of inflation is still higher than it should be, but the trend is in a positive direction, at least of the recent CPI, PCI, and then, or PPI. CPI, PPI, and then PCE. Sorry, I'm mixing up all my acronyms this morning. I've only had 3 cups of coffee. I probably need a couple more. But anyway, CPI, PPI, and PCE, 3 very important measures of inflation, important to you, to me, to media, to the Fed, most importantly, the Fed. The magnitude of all those is too high, but they're trending in a decent direction, where right now in the next FOMC mining, there is none in the month of August. In the month of August, the Fed is taking a break. I say that a little Wow, I really can't speak this morning. tongue-in-cheek, there is a Jackson Hole symposium at the end of the month of August, but the next big Fed meeting is actually going to be in September. So we don't have to worry about that. Of course, we can look at the call sheet and the poly market of what's going to happen, but I already checked and there's a 70+% chance that they're going to leave rates unchanged. So we're not hiking them up. We're not dropping them. So it looks like we're going to be looking at maybe the end of the year, but it kind of depends on how this other stuff actually plays out.
The market reaction suggests that this is an important tactical move from the Treasury, a little bit unexpected.
I wasn't surprised. What I think that threat was out there for a while. Like, I think market participants knew that this administration would look to doing things that are unconventional.
The general upward pressure that comes every time there's a voracious demand for capital, and that's what we have right now. And I just don't think any of those are going to change, short of a recession or a bubble bursting or some bad event like that. Higher interest rates, to me, are likely here to stay.
Let's get some more on markets now. We're joined by Amy Shear-Patrick, Head of Income Strategies at Pendle Group, manages about $70 billion in funds. Amy, great to see you as always.
Great to see you too, Paul.
And I do want to start with the bond buyback. What's your key takeaway from that? Because bond market liked it for now. How long is that going to last?
No, and only one bond market liked it. I looked at Australian government bond yields this morning and our swap yields. Well, didn't really care too much. And I guess it makes sense, right? Because that's US Treasuries is what the US Treasury is targeting, and they're not going to buy back any other longer dated bond securities. But as you said, is it treating the symptom or is it treating the cause? And at the end of the day, the US Treasury has, $2 billion worth of funding to do per annum at its current pace. It needs to roll over about $2 billion of debt every month, actually, $6 billion every quarter. So, you're just shifting the problem around. It actually reminds me a lot of all other sort of intervention that we've seen from other central banks. For example, Japan intervening in the yen. It gives you a little bit of temporary stability in markets, but does it really stop it from going any further?
Some commentary coming through here. Jack McIntyre, who we have on the shows quite regularly, say they have to try something, he says. Sentiment in the long end is as bearish as I have seen in a long time. Coming out of ING, as you can see also on your screens, the fact that it's being done now suggests an ulterior motive. John Woods is here with us on set, Asia CIO and Head of Investment Solutions at Lombard ODA. You guys are neutral DM sovereign bonds. Does this change your mind at all over that call? What does this change, if at all?
Well, this is new news.
Okay.
This is something that we have to look at closely. Is it a one-off? Is it part of a sustained series of interventions in the market? Obviously, this is a real yield and term premium story. And whether intervention impacts that or changes that is less certain. We, of course, had the US intervening in the yen a couple of weeks ago. That seemed to be more of a one-off than a sustained, concerted program of intervention. So I think the market and people like us, asset allocators, will be looking very closely at what this translates to. If it's a one-off, I don't think it has any major impact at all. It's a fundamental story rather than an intervention story. Possibly that 5.3 was a knee-jerk reaction. When the 30-year hit that level, maybe that was seen as some sort of a reaction required. But my sense is that it's not going to change meaningfully the trajectory if it's a one-off, but until we get to see more sense of how that term premium is going to be addressed.
So what do you think ultimately could bring rates lower if it's not intervention like this, if it's a one-off? I mean, obviously, there's so many things that are weighing on the long end, whether it's this AI investment boom, the Fed uncertainty, oil prices, and the like. I mean, ultimately, what is the next catalyst, you think, to bring rates down?
I don't know if rates are going to head down. Okay. I mean, I think that we could well be in a higher for longer environment. Bear in mind, this is a real rates story rather than a nominal rate story. As recently as 2022, we were having negative real rates, and now I think value's returning to the rates market. It's sort of akin to what we saw before the GFC, where you saw real rates around 2 to 3%, and I think we're returning to that paradigm now. I actually think it's probably positive, ironically, but not least for savers, but for just seeing a broad normalization of rates levels away from the abnormality and emergency post-GFC period.
So, to try to make some of that boring talk a little bit more, I don't know, understandable, we'll call it in layman's terms. Why am I losing all of my Chrome pages? Did I really exit out of that like a ding dong? Dude, how did I lose that page already? Seriously? Okay. Let me get this back to where it should be. When this was first announced, I was like, okay, cool, they're stepping in. And then all of a sudden, of course, the devil's in the detail. And as you heard from those people who are managing a lot of people's big baskets of money, they started to question the timing of it, the reasoning of it. And it's kind of one of those things maybe I could best describe as where it's like this feeling of where there's smoke, there's fire. And then all of a sudden they're starting to say, why are you doing this? Why are you doing this now? What's going on? Now, are they being paranoid? Maybe. Are they being absolutely spot on? We're going to find out. But it gave us a bit of a reprieve for one day. Second day, we're kind of running it a little bit down, and people are saying, I don't trust the government, but we'll see how long this actually goes. Bond yields edge higher as traders digest Treasury debt buyback plan. Once again, it's looking at why are they doing this? And then, of course, when you start to look at the big numbers of it, U.S. government debt passes 40 trillion, not million, not billion, trillion. U.S. government debt passes 40 trillion, more than doubling in a decade. So from 1776 to 2016, we hit 20 trillion. And most of that 20 trillion was in the year 2000s. And then from 2016 until now, we've doubled it. Before, when Powell used to talk about an unsustainable rate, an unsustainable pathway, that's exactly what you're seeing in real time. The number itself is big, but oddly enough, it's not so big that we can't control it. The issue is the rate from here, which is, I guess, showing no signs of slowing down. And unfortunately, no one has the balls within the political arena to say, this is crazy. We need to do something about it. It's just getting faster and faster and faster. Very sad to see. U.S. set to cut tariffs on Canada, metals, autos in a trade deal. So before we get into all the Iran stuff, I just want to take a break and let you know that there are other important things going on. According to Trump, well, you can listen to him yourself.
Can you give us any update on negotiations with Canada for a trade deal?
Yeah, we had a very good conversation with the Prime Minister last night, and we've come to a deal with Canada. As you know, the 50% tariffs across the board were going on against Canada today. And they called yesterday and they gave us the points that we had to have. Very fair deal for both. It's good for everybody. But our farmers are going to be thrilled. Our manufacturers are going to be thrilled. And basically, we have no tariffs going into Canada anymore.
No tariffs going into Canada. So obviously, the administration is taking this as a big win. But that's for one country. While other countries, we are apparently trying to, I guess, enact an economic D-Day. Trump threatens Iran with economic D-Day as the war nears its 6-month point. Remember 1 week into it where we were told they were effectively obliterated and this will be like one of the easiest wins ever? Remember in week 2 of this when we were told that it was over and we were just signing the negotiation? Remember in week 3 we were saying, yeah, we're just working on like the finer points, but like we totally won, this is about to end. And then remember when that was told to us from week 3 all the way to almost 6 months? Does anyone remember that, or am I just like, I might be hallucinating? I might be becoming the AI version of myself where I just hallucinate, and then when I'm wrong, I'm just like, yeah, you're right to push back on that. But this is where we're at, almost 6 months later, when in the second week we were told that we won. So that's fun. But anyway, specifically related to this economic D-Day, Trump did post about it. It is on Truth Social if you want to read it, just the TLDR. No one has given the Islamic Republic of Iran a greater opportunity to make a deal than me. Tragically for them, they have failed to take it. Therefore, today I'm announcing the most crushing economic operation ever taken against any country ever. Trump threatens an economic D-Day for Iran and tremendous consequences for its backers. Trump said the U.S. will launch what he called the most crushing economic operation ever taken against any country. Trump has also threatened severe financial penalties on any nation that helps Tehran evade sanctions. The announcement extends a pressure campaign on Trump administration has waged since April under the banner of Operation Economic Fury. So I guess we're attacking their money now. We're going to see how it goes, but I wouldn't hold my breath on it. U.S. starts economic warfare operation against Iran.
Now back to our top story. The Trump administration is shifting its Iran strategy from military pressure to what the president is calling economic warfare. The U.S. president is threatening severe consequences for countries that continue to provide Tehran with an economic lifeline, putting Iran's oil trade and its ties with China firmly in focus. Now, this move comes as the UAE said it has cut trade and financial ties with Tehran, and it has been, of course, one of Iran's most important trading partners. For more on these stories, we're now joined by Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, Stuart, I say these stories because there is so much happening at so many different fronts, but the main thing, or the newest thing that we have, is from President Trump saying economic D-Day, economic warfare, the biggest kind of economic pain any country has faced. Do we have more clarity on what exactly this economic pain will look like beyond those headlines?
Yeah,
no.
Lots of brutal
I mean, in terms of the official
tweets.
statements, quite what's been said privately is a different matter. I do think it's really interesting this week in particular that you've had this massive pivot, and it's definitely towards something that may not actually be, but certainly looks like secondary sanctions. And that's a really big deal because that's in effect taking on China, Turkey, Oman, Uzbekistan, lots and lots of countries that trade with Iran to some extent, or at least have historically. And obviously, as you said, you had that big move from the UAE yesterday. That's hugely significant. It was its biggest trading partner for a number of years. That's going to have a huge impact. So quite how this develops, I mean, that's basically the list of the countries we're going to keep an eye on and see how they react.
Yeah, and just to touch on the UAE, of course, we heard from the foreign ministry, we've heard from the senior advisor to Sheikh Mohammed bin Zayed, Anwar Gargash, yesterday about those financial ties that have been cut from the UAE side when it comes to trade and financials. What impact could that leave on Iran, and not just when it comes to the UAE, but also countries in the region severing those ties?
No, I think it'll be very important because it was a lifeline for sort of basic things like food and electronics and, you know, basic consumer goods. So I think in terms of Iran's isolation economically, that's going to come on top of what is already a very difficult situation. You know, as we've repeatedly said, it's had decades of sanctions. Its currency is at a record low. It's facing hyperinflation. It's got rolling blackouts across the power network. It's a very tricky situation. And if now it literally has no trade with any of its major trading partners, it's really hard to see how they can keep going for certainly several more years, maybe a few weeks. We'll see beyond that.
So to be fair, I know I'm kind of making fun of Trump a little bit for the things he has said that has clearly not become reality, but it truly is economically destructive. Like Iran's economy it's not completely on the brink, but it is rapidly sprinting towards the cliff. So it is effective, but apparently the government in Tehran there just doesn't really care. So we're going to see who can take more pain. It's basically, can Iran take more pain or can Trump take more embarrassment? Which one of those is going to crack? All right, turning to individual equities, we have some earnings. The big one on the morning was Walmart and Alibaba. Alibaba shares fall as AI spending drives 75% drop in net income, so that one's taking a hit. Walmart hikes full-year outlook, says it will use huge tariff refund to keep prices low. Both of these are taking a pretty sizable hit this morning. Walmart is currently down 7.6%, and Baba is currently down 5%. So the two major ones of this morning not looking the best. And I know This has been a little bit of a doom and gloom start to the day. I'm obviously talking about some negative things, and for decent reason. The market is down, but not everything is down. Let's talk about Bitcoin, which is in the mode of Rip City. Not that long ago, trading at 64, currently trading at 72, and the dip in July was all the way down to 58. And not only is it showing life, it's showing real life, and then obviously the crypto-related tickers. Coinbase is up 6.5%, maybe getting a breakout. MicroStrategy is up 9%, maybe getting a breakout. CRCL, Circle, that one is up 9% yesterday, up 5% this morning. How is Tom Lee's BMNR? That one is up 10% yesterday, up 6.8% this morning. Mara, a crypto mining, up 7.7, up another 5.4. So you get the vibe that across the board, where if you're looking for green today, the green is found in Bitcoin. Here's what you need to know. Bitcoin is surging, and this is why. Bitcoin and Ether surge as Trump urges Congress to pass the Crypto Clarity Act. So yes, I'm going to talk a little bit about this whole 4-year cycle in the world of the grandfather of crypto, Bitcoin, but the recent movement is political developments within the U.S. Market sentiment in cryptocurrencies was supported by Trump's plan to buy sizable amounts of Bitcoin as he affirmed his support for the industry. Remember, price is always a function. It's the equilibrium of supply and demand. We know that Bitcoin has a finite supply, and when demand increases, aka when the administration comes in and buying, what do you think price does? It goes up. Investors should now be positioning for a move to $100,000 by the end of 2026. Let's pause it there. Obviously, this is coming from an analyst who's clearly very long crypto. But my question to you is, do you think this is feasible? We're currently at the end of August in 2026. So we have September, October, November, December. We have 4 months. Do you think in the next 4 months, it is possible for Bitcoin to go from 72,000, where it is in real time, to back again above 6 figures? Let me know. The cryptocurrency has been range-bound between 62 and 66 in the past 6 weeks. It's been very, very boring, has not been doing much whatsoever. And then recently, it's been nothing but a rocket higher and higher and higher. You can see exactly where the news hit the tape. And since then, we're just grinding higher. Love to see it. It's been very, very boring to pay attention to ever since June of this year. And before that, it was a sell-off. But right now, I'm liking the life. So obviously, short-term, very bullish, but I want to break down some of the longer-term things. The Bitcoin cycle chart is going viral. So if you've been paying attention to crypto, specifically Bitcoin at all, there's a really good chance you've heard about the 4-year cycles. And it's this idea of you have, out of every 4 years, there's a bad year, kind of a flat year, and then 2 years of ripping. And if you align all these years, 2014 to 17, 18 to 21, 22 to 25, and then finally 26 to 29, we're in 26, which does align with kind of a down year. So people are saying, okay, is this the bottom? We start to pick up quote unquote pre-bull in 2027, and then we really, really rip into the end of the decade. Now, if you want more of the specific numbers, I have them right here. People have done a lot of just, I guess, analysis on this data, and they're basically looking for 364 days of it not being so bueno, and then basically a time period of 1,064 days to actually be bullish. And then this is effectively how it would align. Let me fast forward to the end of this just so you can kind of see that looking at the 4-year cycle of Bitcoin, which just has to do with some of the technical aspects of Bitcoin. I have videos on it if you want to watch that. But regardless, what you need to know are the numbers of it rips for just over 1,000 days, and then it pulls back for a year. It rips for just over 1,000 days, pulls back for a year. Rips for 1,000 days, pulls back for a year. And if you're wondering where this bottom is, like this actual cycle bottom, it doesn't perfectly align with the calendar year. It's a little bit off. Cycle bottom, October 5th, 2026. So this might stand to be true. Maybe it is, maybe it isn't. It's been true 3 times before. And I'll admit, from a person with a background in statistics, that's not the most amazing just data count to go off of. But at this point in the young life of Bitcoin, that's all the data we have to go off of. So just wanted to present that with you, explain why Bitcoin's going up in the short term. And I actually am pretty confident on it. I want to see what 2027 brings. But obviously on that note, I want to turn it over to you. Do you think Bitcoin is a straight up scam that shouldn't be touched by anyone? Or do you think this is just the lull, the calm before the storm, and the next 3 years are about to be crazy? Of course, let me know. Let me know. Let me know. Let me turn it over before you guys let me know, because I can't see the comments right now. I do want to know what you guys are thinking, what you guys are talking about. Okay, we just got the upside gap on the Qs. If you were playing the upside gap on the Qs, it literally just hit within the first minute. And now there's 2 more gaps to concern yourself with. Where is MSTR dropping? Mara dropping. CRCL dropping. BMNR dropping. Okay. HUT dropping. Okay. So it popped for a second and then nothing. Oh, I forgot.
Diggity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun.
All right, let's go back to Bitcoin. Folks, what are your thoughts on Bitcoin? Let me know. Explain it to me. Tell it to me. Where do you guys sit in the world of bitty Bitcoin? Do you think it's a scam? Do you think it's over? Are you just weathering the storm till October and then you're buying more? Folks, let me know, let me know, let me know. I'm not asking this rhetorically. I truly want to get your thoughts, because for the longest time, we kind of even stopped talking about it because it was doing nothing. It's been, if we look at the weekly chart, absolutely nothing. It's finally starting to show some life. It's finally getting above. In the previous pop, it didn't hold. In the previous pop, it didn't hold. But is this time like actually different? We have a natural buyer of the U.S. government. We have the end of this cycle that maybe it's one of these self-fulfilling prophecies that enough people are looking at it, talking about it, that maybe they're all planning for that. I kind of just want to know, have you guys lost faith? To be completely transparent with you, I still own my Bitcoin. I've been in it for a handful of years now, and slowly but surely, I have a Bitcoin miner, so slowly but surely I'm adding to it. But we're going to see. Did Ninja Trader just crash? Well, it's a local program, so that would just be on yours. I buy $10 a day and hold forever. Well, you've been averaging into a lot of nothingness, but if this really starts to pop, you're going to be feeling pretty freaking smart. Here, let me go back to this chart just for market open. Been in Bitcoin since 2015. The cycle is unchanged. We will likely bottom later this year and probably haven't hit the bottom already. I wouldn't mind being proven wrong. Well, the cycle bottom is October 5th. So we have roughly, what, 1.5 months from there. So there is still time. But in terms of the cycle hasn't been proven wrong, that's kind of poor statistics, because we only have 3 examples of it. When you're talking about a 4-year cycle starting in roughly 2010 and you're in, 16, it's just not that much. That's like flipping a quarter, only 4 times. And you could be like, oh, 3 out of the 4 times it lands on heads, so it favors heads. Like, you just don't have that much data. So I'm not saying that it's wrong in the future. Like, it might be proven to be very, very accurate, but we just don't have that many examples. And even right now, you're saying we have 4 examples. Yeah, that's just not statistically significant. It's not. No one who knows anything about math or statistics would say that 4 pieces of information, and like, unfortunately, it's just because it's so long. That's just not, it's just not it. No, the having is no, once again, we just don't have that much information. I'm not saying that it's wrong. It might prove it to be statistically accurate. We just don't have enough data. So what I'm saying is wrong is to assume that it is statistically viable at this moment. Once again, I am not saying it's wrong. I'm not saying it's right. I'm saying because we have such a lack of data, it's just not accurate. That would be like, for the next week, tracking weather, and let's just say you're in the middle of the storm and it rains most days. Let's say it rains 5 out of 7 days. What you're doing is extrapolating that forward and saying, oh, it just always rains 5 out of 7 days. You just don't have that much data. So I'm not against it. I'm not like, I could understand how this maybe seems that I am rooting against you. No, dude, I am long Bitcoin. I have Bitcoin. I want it to go up. I'm not rooting against you. The part that I'm really trying to harp on here is quality statistics and mathematics. Like, you just can't make the assumptions that I see you making. I am pro Bitcoin. I fully understand the use case for it. I understand that the US dollar is always losing purchasing value. Dude, I get it. The having is programmed into it. Therefore, we understand it's a trigger far into the future too. You're conflating 2 things that have no relation. Yes, the having is programmed into it. It is code that we can all see. It's all open source, but that doesn't necessarily explain the market dynamics of how people are going to react to that. Because remember, it's still public. It's on the public, free, and open markets. People get to buy and sell at whatever price they want. So you don't know when buyer demand is going to come in, or maybe buyer demand is going to get more aggressive, less aggressive. Maybe seller demand is going to get more or less aggressive. There's these outside forces, such as the Clarity Act, of it can move it, that has nothing to do with the halving. So what you're stating is right. The cycle has been observed from 2010 until now. Yes, the halving is a very real thing that we could all look at, but you're trying to apply that to something that you can't make that jump. You're making a logical jump that does not exist, and this Clarity Act is proof. The Clarity Act, the recent thing that's being announced, causing Bitcoin to basically pop from the low 60s to the low 70s, it's not like that was programmed into Bitcoin. Bitcoin knew nothing about that. So this is just one real-time example of sometimes there's outside forces beyond the programming and the nature of Bitcoin that impact the prices of Bitcoin. And you're making a really, really dangerous jump of the pure technological functionality of Bitcoin to exactly what you think buyers are going to do with that in the future. That's a dangerous, dangerous jump. Flipping a coin is not influenced by outside factors. The cycle can be influenced by outside factors like government, adoption, and other things. Yeah, so what is the jump? Well, I think you and I are saying the same thing. The math of flipping a coin is the math of flipping the coin. The math of Bitcoin is the math of Bitcoin. But the math of Bitcoin isn't necessarily the price of Bitcoin. It's that final jump that's a very dangerous jump to make. I don't really pay attention to buyers. I pay attention to miners and hash rate. Okay, that's a silly jump to make because, once again, it is like any market. It is the aggression of buyers and sellers that push price up or down. It is not necessarily miners or hash rate. You can find interesting correlations, but then also sometimes those correlations completely break. And in the last 5 years, we could find multiple examples of that. So you could pay attention to that stuff. But once again, price goes up when a buyer and an agreeer agree on a higher, buyer and a seller agree on a higher price. Price goes down when a buyer and seller agree on a lower price. That's the only thing that influences price. Now, you might go to those buyers and sellers and ask them, why are they buying? Why are they selling? But what's true in the Bitcoin market is true in any market. Things go up when a buyer and a seller agree on a higher price. Things go down when a buyer and a seller agree on a lower price. Now, you're seemingly coming up with a model to try to understand why buyers and sellers might agree on thus a higher or lower price, and that's fine. But also that model might be true for now. It might be a right model. It might be a wrong model. The model might change. You don't know. But what's true with Bitcoin is it's still traded in the free and open market the way SanDisk is, the way the SPY is, the way the Qs are. It's still just the basic market influence of supply and demand. What moves all of this is supply and demand. So you have to ask yourself, and price is the equilibrium of supply and demand. That's what we're all looking at. So if you have aggressive buying coming, it goes up. If you have aggressive selling coming in, it goes down. But what's true about Bitcoin and the SPY and about the housing market and about any market in the world, the art market, it's just always about supply and demand. I think the Clarity Act changed the OCT date, and now we have a bottom. The October date. No, that wouldn't necessarily. That's another dangerous jump that you're making. This is like one of the biggest things I've learned about statistics, and then when people try to apply it to the market, is people love to extrapolate forward truth out of a very small set of data, which is a very, very dangerous thing to do. And it's part of just our stupid little monkey brains that we see something once and it's referred to as recency bias or anchoring. And we're like, okay, I just saw it in real time, so that thus then must be true all the time. No. So just because Bitcoin is going up right now in a reaction to the Clarity Act, which is basically just we have more demand. The government said that they're going to be buying. So, of course, you're going to go up. That doesn't necessarily have an impact on the data of this whole 4-year cycle. Like it just, you got to be really, really dangerous of using a small set of data and assuming that small set of data properly explains an entire data set that you're looking at. That is a very, very easy misstep to make in the world of life and trading and data. It really is. Just so you guys know, on SPX, there's a downside gap fill all the way to 7610. That's possible today. I hope it doesn't happen, but obviously it is possible. Looking at the SPY, very similar setup because it's the same thing. The Qs have an upside gap fill to 72927. They have a downside gap fill to 701.59. But in between that, we have a recent low, and we also have the daily 50 EMA, something that I'm personally paying attention to. The Russell is also gapping down. There's an upside gap fill to 301.23, downside gap fill to 296.66. So that's it for the three major indices we're paying attention to. Looking at Bitcoin, obviously, this is just a rocket breakout, filling out this zone. The next statistical resistance, or I should say geometric charting resistance, technical resistance, whatever the fuck you want to call it, 74,000. Apple having a nice double bottom, looking as if it's gearing up for this upside gap fill, 32959. Netflix, I told everyone that I'm finally going bullish on this after this huge hit. So I am playing that. And actually, how's that doing? How is my, do I need to log in? If I log in right now, would you guys see my password? Only one way to find out. Nope. Okay. Looking decent. Not as good as we were yesterday, but I'm up 48% riding that, up about 5.7K. So I am long on Netflix. I have time on it. Tesla, not looking good. It's a little bit of a bounce. I mean, there's an upside gap fill. If it can get above and hold above 300, the party might be back on, but Tesla's under a considerable amount of pressure. Micron, I am looking for the bounce. I'm looking for this a higher low and just to keep going. SanDisk, very similar situation. Broadcom getting absolutely destroyed. I am looking for a 5-touch bottom here. If it starts to go, I have to get out of my Broadcom calls. Lam Research, similar situation. I'm looking at these recent lows. I hope it's a higher low. I need it to turn around. NVIDIA, just kind of chilling, not doing much. Meta, continually under pressure, and it might stay under pressure until this whole lawsuit passes. Microsoft chilling after a huge pop. RUM, a little bit of a red day after an attempted breakout yesterday. Not so surprising that maybe there's some profit taking at this resistance level. So just waiting on that, but still very optimistic. SpaceX putting in potentially a lower high, but paying attention to it. I still have my one share. I have not done my investment quite yet. AMD, it's just range bound, not doing anything. Palantir taking a breather after a nice pop. Intel actually lower high, kind of officially breaking down. Amazon maybe chilling at the bottom of his cloud. Would love to see this get back above 268. Looking at Google, flat, literally doing nothing. TSM potentially breaking down, but also maybe a higher low. Just have to wait on that. No real call out there. HUT getting a little bit of a bid after getting hit. MRVL continuing its trip higher. Remember the recent news on Marvel here, which is in the world of AI, is that Google can buy up to 7% of it. And obviously the market like that yesterday, continuing into today. ASML, another AI play. They make the machinery. It got a fake out breakout, looking for this retest to be a higher low. Salesforce continuing higher. Oracle, this is the one that Michael Burry is currently short, and he's probably really hoping this isn't a higher low. He does not want this to push 160, watching it closely. Texas Roadhouse, a bit of a breather after an all-time high. CoreWeave trying to save itself at the cloud. Coin up 7%, crypto's doing well. MicroStrategy up 7%, crypto's doing well. DJT trying to bounce after a nice bounce, got hit, trying to bounce from there. AMC slightly green. Bonds, this is the problem in the market this morning. Bond prices are clearly taking a dip. Silver, like I said yesterday, that was a nice dip buy push. I'd look for silver to go to 72. Gold also showing strength. It's actually really showing strength. I'd be looking for 4,600. Oil is going up. And remember, we consider oil to be the best barometer for the tensions as it relates to Iran. And right now, oil is going up, which tells you something that the tensions are not really trending in the best of direction. So, all right, that's your overall breakdown. Of course, I'm going to show you options flow. Let me reload this so we get the most recent options flow. Above my head is Bookmap. That's for the NASDAQ. So you can see, okay, VWAP, we're coming up to VWAP. S&P 500 trending up nicely, not only in price, but also options flow. Mag 7 is kind of flat. Price is slightly up, but really options flow is flat. And then looking at the NASDAQ, thus far, the first 15 minutes in the day, effectively just going flat. So we're going to keep our eyes on that. For those of you curious about the big player positioning, we have a pocket of negative gamma from 680 up to 95. So there is a clear, massive positive gamma node at 700 flat. Key technical level, key psychological level, and obviously key gamma level. So this little pop that we're seeing this morning seems as if it's all going to be decided on, do we get rejected at 700 or do we actually get above it and hold it? This is very evidently, with no doubt about it, the first major watch of the day. Can we get above? Great. The bulls have a shot to maybe try this red to green test. If it gets rejected here, if it's a fake out breakout, if we try to pop up but it comes down, if it's flat out rejected there, not so good. There's arguably some support at 90, but if it starts to break 86, I'd be looking to 75, and below 75, I'm watching 50. So the test of the day, or I should say at least the first test of the day, if you're watching the S&P 500, for many, many reasons, is this absolutely gigantic positive gamma zone at 700. If we get into that, and this is a big if, it's an if-then statement. If we get into that and hold, you might get a slow grind action up to 7715, which kind of puts us in the realm of the spot gamma implied one-day move high, and also a hedge wall that's at 7725. So I wouldn't be expecting an explosive movement in the event that we get above, hold above 7,700. You have a reach shot at 7,725 based on the current set of information. On the flip side, on the bearish side, if it is rejected here, I'd be looking for a push down to 7,675. If that doesn't hold, we're talking, there's some profit taking maybe at 665, but then there's this spread down here. There's a put credit spread down at 7,650. So it's right now, I would not be sitting here confidently bullish or bearish in either direction. I think the right play to do, and what I'm going to attempt to do, is wait and see what the market's actual reaction to 7,700 is. Can I confirm the MicroStrategy gap or the Microsoft gap? I mean, it's not, yeah, it's right there. 401.25, 466.84. Like, all you have to do is just put a marker at the high. It's not some like high-end rocket surgery, folks. Sam, I'm sure you have these levels and you're probably just asking me for confirmation, but for those of you who don't know about it, like literally just, what is the high value? 466.84. What's the high value? 401.25. But that's it. That's it. Easy peasies. We don't have to overcomplicate it. Just literally, if you gap above, just put a marker at the previous trading day high. And yeah, I'm sure you have those, but for anyone who needs a little bit of help, don't overcomplicate it. Don't overthink it. Literally just either mark the high or the low. That's it. Easy peasy lemon squeezies. Easy peasy lemon squeezies. All right. As we are waiting for the market to get going, shout out to Tradeify, code Goonie, Goonie. I don't want anyone to get confused, so let me hack the mainframe really quick. Let me hack the mainframe. Goonie. All right, code Goonie right there will get you 40% off on Tradeify. And if you buy the bundles of 5, you can get 45% off, which is really nice because that means on a 50K account, you could get rocking and there's no activation fee for less than, no activation fee. So that means you can get fully rocking for less than $100 all in on a 50K account, which are most people's favorite account. I like the select accounts. I do the blue pill select. Those are my favorite. I think those have the best rule set. Obviously, that's like my own opinion. But right now, a solid 40% off. You can get even more off if you do the bundles. I believe you can get 5 accounts for like $460 or something like that. And when you do the math per one, obviously very solid. Yes, I am trading on Tradeify myself. Actually, I'm trading on various ones, but Tradeify, we maxed those out yesterday. So pretty stoked about that. And speaking of that, okay, my trade copier is maybe set up properly today. We'll find out. I'm not trading right now. I just wanted to make sure my trade copier was set up. But anyway, Tradeify, shout out to them. And actually a little bit of a specialty note. I'm going to be going on Tradeify's live show at 11:30 today. So it's going to be my first time, just invited to it. I thought it was a cool opportunity to kind of chit chat with other traders, because when I'm in here with you guys, like you're the main traders I get to chit chat with. I don't really commonly go on live shows with other streamers in real time. So I thought it was like a cool opportunity. So that's going to be happening today at 11:30. I'm going to be going on Tradeify live, and we're going to be kind of doing like a midday session trading with someone else, which I'm excited for it, because most of the time it's like written chat when you guys and I, like, we go back and forth. It'll be interesting to actually be able to hear another trader and see what's going on. So going on Tradeify live in about just over an hour and a half, hour 45, 11:30. So it's after the show today. So just want to let you guys, I don't know a little bit of what's up, what's going on. know a little bit about what in the world is going on in my life. And now, if you guys want to let me know what's going on in your life, we could chat about it. If you guys want to let me know what's going on in your life, we can chit chat about it. Oh, that's a big risk, but I kind of like it. Maybe I don't. I don't know. I was thinking if it actually bounces off the 50 EMA, the 100 EMA, and can like recapture 400, do I like that as a long? I might not even have to make that decision though if it doesn't bounce out of here. Or I might very well have to make that decision rather quickly. I'm just wondering, are we finding some support? We might be. What's the flow? Like, do I like this trade actually? I'm watching closely. I'm not in a position now. You'll hear it. It'll say order filled or whatever it says. Looks like it's breaking down. Looks like I don't have to make the decision anyway. I was getting ready just in case. Sell, sell, sell. Maybe it's an overshoot of the like all these wicks. All these wicks could be a little bit of an overshoot. Finding support at the 50 and the 100. What if it does bounce? Maybe it's finding support at the intraday. I'm watching to see if it recovers quickly out of here, or does it actually want to trend down? I'm a little hesitant of it just because remember early in the day you have bigger ranges, so you have to size down so you could take on the appropriate size risk. But really my hesitation comes from the fact that, okay, is the 3 minute going to bounce? Looks like it got rejected at the 100 EMA. Looking at the 5 minute, it's still red. Looking at the 10 minute, it's still red. Looking at the 15 minute, it's still red. Looking at the 30 minute, it's still red. There's a lot of it's still red, which means that if I were to play this, which once again, I have no position right now, I was looking at maybe a potential like little fake out breakdown if it kept going, but no, this is obviously still showing bearishness. So once again, no position. But looking at this, I was thinking, oh, okay, is it just a little fake out from this? And we get up, and then obviously I could structure my risk here, even playing 50% of the range, some little bounce, like maybe it would work, maybe it wouldn't. But obviously that did not develop the way I wanted it to. It did not. Even a retest of 409, which was RTH VWAP, would have been a nice play. But it just didn't develop that. I was waiting for a bit of confirmation and just didn't get the confirmation. But in those types of plays, I don't mind it, but I would want to be really quick with my move to break even. And the reason I say that is because it is against trend, as I'm showing you. The 30 minute is bearish. The 15 minute is bearish. The 10 minute is bearish. The 5 minute almost broke out, got smacked. A fake out breakout is by definition bearish. The 3 minute right here, a fake out breakout, when it fails, like if you're attempting to get a bullish breakout and it doesn't happen, you're only left with it actually being bearish. So I was wondering if it was a little fake out, but this seems to actually be like a legit smack. So I might actually be looking for a pop into this zone that I can now fade. So my first idea on this setup as of 9:49 was, oh, okay, can I buy the bounce? Now that it actually cracked, I'm wondering, will it bounce back into this zone? And then that's maybe something I could play to the downside. Will it come back in here and now fail? Remember, I don't want to chase the breakouts up here. Like chasing this is not my play. Chasing this breakdown is not my play. I would prefer to trade with the overall trend, but then wait for a shorter term reversion to just minimize my risk. Matt, I think you need to tell your mom about the $1 million payout. She will get you paid. I actually don't know if she knows. I mean, I know once in a while she watches the show. I haven't told her in person, but she does watch the show. So there's a good chance that she's read you guys writing about it. Maybe she's heard me talk about it, but I actually don't know if my mom even knows it's a thing. We've never chit-chatted about it in person. Did you get it finally? Nope. I am waiting. Patience, patience, patience. Maybe more important than the NASDAQ is the SPY. So we double topped at 97, never even tagged 700. But right now we're coming into this zone where we already wicked quite a bit today. We wicked quite a bit right here. We're in this region of, we found support. Will it be real support on the day? I don't know. I'll tell you better at 4 p.m. But for right now, support, 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 support. It gets interesting if it breaks back above 92. Gets interesting if it breaks back above 92. This kind of gets interesting if it actually fails. All right, here's our test. So we had support, we had support. Now we're asking, is it real support? Is it resistance? Is this a fake out? Rejected at 90. All right. Got to be on our toes. SPY flow was up, then down. Mag 7 was flat, then down. NASDAQ. Is this a little fake out? It's pushing. It's trying to fight. It's trying to save this move from 70, the 70-point move. It found buyers. A little fake out breakdown there, team. It might be going. We are back to RTH VWAP. I'm happy I waited. Obviously, if I took the trade, if I could have withstood, well, no, for me, I would have had my stop at 50. So I would have been long at 93. I would have been knocked out for 40 points. It would have gone another 40 points, and then it would have come back in my favor, and I would have been green, and then I would have been pissed off, and I probably would have gotten tilted. So am I happy I waited? Without a doubt, because this play would have cost me a lot of money, even though it would have gone in my favor anyway. Very happy I waited. This patience... It's waiting for that setup. Like, you could be right in the direction. I don't see enough educators talking about this. Is picking the direction is already, like, even this. Now, talk about brutal fake outs. I mean, look at these ranges. We just went from 308 to 410 back down to 360 like it's nothing. If you're trading size, like, this is a tough size to hold through. If you're trading size and you get lucky in your bar, well, congrats to you. But talk about it. That was a fake out. It seemed as if it was a fake out breakdown. That turned out to be a fake out breakout. Look at, we pierced just above our zone and it got smashed. You gotta, sizing is so important. It's more important than your strategy itself. You could survive a lot of market conditions, even with a poor strategy, if you keep your sizing in check. And I don't see enough people talking about that. I see enough people talking about, like, oh, this is when I trade, blah, blah, blah. But they don't really, stress the importance of size. And the one thing that I've learned throughout my trading career, I'm not saying that I'm always disciplined to represent that, but the one thing from the math that I know about trading is the size of your trade is probably the most important indicator of your long-term survival and your long-term success. Are you trading with appropriate size? I'm devastated, man. Blew up my PA this week. I'm sorry to hear that. I'm not saying that this is going to make you feel better, but welcome to the club. I've blown up thousands of funded accounts. I'm not saying that as like a braggadocious thing. If anything, that's an embarrassing thing, but it's, I don't want you to beat yourself up as if that's abnormally bad performance. It's not. That's just, it's trading, man. It really is just trading. So I understand you feel bad. That costs you money. That costs you effort. That, like, I'm sure you put a lot of effort into it. Your only option, it's one of two. You either quit trading or you dust yourself off and give it a go and try to learn from your recent attempt. Those are your two options. You either say, nope, trading is not for me, and you never trade again. Everyone should always invest, but trading and investing are very different things. But if you choose to keep trading after, obviously, a setback, you're going to piss away more money if you don't apply what you learned in the last cycle, or you could attempt to apply what you learned in the last cycle and be better in the next one. Those are, like, exclusively your two options. Learning my lessons, gotta stick to my trading plan. I know I can do it. It's just got to get better. Yeah, we're kind of all in those, like, same situations where do you have the discipline to do what you know you should be doing? Hang on, 9:59. It's almost the 10 a.m. It's almost the 10 a.m. craziness. 3:20. I'm waiting for what I want to be my trade. Oh. It's a bit more risk that I would like to take on. But it might just have to be the trade, which is the benefit of trading MNQ is ideally. All right, 10 a.m. is about to hit. All right, a little bit of a breakout. We're testing. We're coming back into support. Turned into a transition, turned into resistance. We're going to see. We're watching closely as the SPY's right in it. Maybe a little fake out breakdown, a little bit of a pop. Remember, at 10 a.m., we do see sometimes larger players hitting the bid. So sometimes right at 10, somewhere between like 9:50 and 10:10, that 20-ish minute region, you can kind of see some series size hitting the tape. And depending on how thin the book is, when you have series size, you can really get some serious movement, which maybe explains why we went from 460 down to 310, up to 410, down to 330, now up to 400. Jesus. Just buy and hold good stocks and ETF. That's the best for investing. Remember, investing and trading, a lot of people, because they both happen in the stock market, like kind of assume they're the same thing. They're wildly different sports. I actually believe investing is incredibly easy. Buy high quality blue chip stocks, especially on dips, and move on with your life. If you want to be a little bit more hands-on, you could do wheel strategies. If you want to be a little bit more hands-on, you could do portfolio secured puts, but you don't have to. But investing is that. Pick high quality blue chip stocks, buy them, invest in them, especially on dips. If you want to get into it, use some option strategies. That's it. That's the start and end of investing. Trading, which seems similar because it happens in the stock market. You have longs, shorts, options. Like, it seems similar because there's a lot of verbiage overlap, this and that. But what matters in it is completely different. Trading. Hang on. What levels are we at? What levels are we at? That's the 10-minute candle. Trading and investing, I think, get confused in people's minds because there is so much of just like seemingly an overlap. But I don't think many things could be farther from the truth. What matters in trading is not fundamentals. It's the geometry of the chart, your risk to reward, that type of stuff. While with investing, it's long-term fundamental analysis. It's trends. Can you explain a debt spread? Yes, I can. Just give me a second because I might be trading soon if this ends up failing. I might be. So just hold that. Feel free to ask me again in a second if it seems as if I all right. What the fuck? Oh, I'm on the wrong chart. God damn it.
Order.
Fuck. I ended up chasing that. I ended up chasing that by about 10 points. So it's not the end of the world, but I was on the NQ chart instead of the MNQ. I took a short. I wanted to get in somewhere between 40 and 50. And I ended up getting a fill at 31. Just locked in my first one. I locked in at 21 just to give myself that 10-point buffer. So now I could treat it as if my fill was at 41, which is a little bit closer to where I should have like fairly been. Oh, but now we need levels. Now we need levels. This might end up just being I was a little bit chasey, but that's why I split it in half. I try to execute the trade accidentally on an NQ chart, which I can't trade 10 NQ. That would be absolutely fucking nuts. So then I went to the MNQ chart, got the trade executed, locked in half of it, 5 of the 10, rather quickly, because if I lock it in at a 10 point, basically my break even becomes 41, which is a little bit better to where I should have been. So really, I'm kind of now treating this as like a half size position. This isn't necessarily my profit target. I just want to update it in case there's a little bit of a vomit. I don't want it to accidentally get hit. I want to see this test of 300. And on the test of 300, I'll probably move my stop to my days break even at 41. But I'm just going to try to give it a second to see what actually happens here. Once again, I have a short position. It's a fill at 31, but I did lock in half. And it might be giving me a little bit of that crack. Come on, crackers. Let's go, crackers. 80. 80 might be a tough level to break. 80. You have 64, 70, somewhere in this. That's a wide range, though. 240 to like 90. That's a 50-point range where if it bounced, no one would be surprised. No one would be surprised if it bounced off of 300. I mean, this one's a little of a tough read in terms of like what I like feel confident my target would be, because 300 to 240, it could bounce anywhere in there and everyone would be like, yeah, that like kind of makes sense. We are at the intraday low on SPX. I want to see 75. I'm going to set an alert for 75 just so I don't miss it if I'm watching NQ. How's flow looking? Nasdaq is getting hit. So I'm on the right side of options flow. Mag 7 trending down. Nasdaq trending down. S&P 500 trending down. So I am on the right side of options flow thus far. 1 minute on ES went bearish, but might be retesting. 5 minute tried to break out, got smacked. 10 minute got rejected. 30 minute is clearly bearish. Nasdaq was bullish, tried to fight, seems to be trying to fight again. Do I have to cut this? I'm giving it a second. I'm watching this right here. All right. We're going to see if this support transition turns into resistance. Watching it once again. Will it hold? I don't know. Your guess is as good as mine. I was trying to play the rejection. I had not the highest quality fill, which is why I dumped half of it pretty quickly. How low do you think Moderna can go? How low? No idea. I wouldn't be playing that. If I didn't already have a position on that from like way long ago, I wouldn't short it, because why would you short a company that just said they might have cured cancer? So I wouldn't bet against it. And in terms of playing it, I wouldn't chase it. So my only leftover play is basically, did I have a position before the announcement? So for me, I didn't have a position on Moderna before the announcement, so it's just not my play. Just not for me. Okay, what are we doing? Is this going to get rejected? Okay, I am on the right chart this time at least. How's SPX? SPX flow. I think this is going to, it's 10:08. Going back my way. If it got up to RTH at 90, I was going to add to the position. 90, 30, my average would come up to 60, and my risk wouldn't be that bad, especially because I already locked in a little bit of a game. But obviously, that just didn't happen. We only popped up to 80, and then we popped to 75, and then 70. So just didn't have the opportunity. And even if we bounce there from now, I don't know if I would, because now it's kind of showing signs of support. And unfortunately, that support is right at my entry level. Options are still trending down. Mag 7's definitely trending down. Nasdaq's definitely trending down. Of course, trends switch at any moment. 1 minute. I think I just need to wait. It's fighting over here. SPX above 85 could get dangerous, trading at 82. Finding support at the opening low, basically. Oh, maybe I like that's, we had support, resistance, and now you have clear support down here. Very evident support. And actually, it's kind of a tight range, too, between the support and the resistance. What is this high? 410. We're going to see what happens here. Can it actually get going, or is it just going to get rejected in here the way it did? 950, 956, 10, 1006. We're in a test zone. We're in a test zone. Actually, we're really in a test zone. Jesus. That was 410. And we're now at here. RTH VWAP and the 50%. Kind of an interesting zone. You're at 400, you're at RTH VWAP, and you're at the 50% of today's range. If it fails here, do I want to take this short? I mean, if you snagged it at that high at 408, that's not the worst trade. Once again, the orange dash line is the RTH VWAP. The VWAP started at 9:30 market open. The blue dash line is the halfway point between today's intraday high and low, not the full session high and low, just from 9:30. We measure that from 9:30 to 10:30 to have a better understanding what IB is. What does this actually want to do? Is this going to fail? Oh, 70, 30, 40, half of 40 is 20, 20 plus 31. My new average would be 51. If I short this roughly now, my new average becomes 51.
Order filled.
All right, and it turns out we're in it anyway. All right, so let's use that to improve the average to 51, see if we could get out of this. I want to dump half the size at break even just to improve the average from 30 to 50. But obviously, we also can't be tempting it that much. Is it gonna? I'm just trying to play this VWAP rejection. Maybe it works. Maybe it doesn't. Maybe it works. Maybe it doesn't. I could always dump half too. I could dump the half I just got into. I don't necessarily have to go all in or out. I would much prefer that this just fills my half here. And now I've improved my average really to 61. Because I did go from 31 to 41 on the fill. This one would be dumping half at break even. And then all of a sudden, I'm walking up my average. My average went from 31 to 41. If this hits, I would walk it up to 61. So kind of improving it by 30 points if I could get this quick fill at break even. But it's really battling it out here. I was hoping for a different reaction, obviously. Maybe it wants to pump off of 400 to 473, the next VWAP. I might need to dump this. Maybe I want to dump it earlier, save myself some change. I don't know. It's still fighting, though. I think I need, and this is looking weak. I think I need to kind of muscle it out. SPX, it's below. I think I need to give it more time. Of course, if it gets on top of the region, I have to just admit I'm wrong. But we'll see what happens at 400. Actually, specifically 410-ish. Could be a higher low, but I'm just watching rejection, rejection, rejection. Just literally I'm seeing what happens in a region of resistance. Obviously, support, support, support. I thought this third-ish test, fourth, fifth, would crack. Obviously, it didn't. But SPX is starting to show some weakness, which is why I'm willing to give this trade a little bit more time, because it looks like it got a clear rejection here at 10.10. And, oop, hang on, scratch that. NASDAQ options flow picked up at 10.05. Mag 7 is still diving. Oh, I could dump half the size, and then that would give me just more time, more room to work with. But I am trying to dump half the size at break even, because then I would have a lot of time to work with. All right, maybe it's finally going my way. Remember, I'm trying to dump half at break even, which then brings my average fill really to, it's going to show 71, but it's not. It's 61. And that's just because of FIFO, first in, first out. But I would love a quick fill here. I would love a quick fill here. Love a quick fill at 50. Come on. Come on. Come down to 50. Come on, brother. Come on, brother. Bouncing off of 57 for whatever gosh darn reason. It could be the 50 EMA. I don't know. It's starting to get pretty wicky too. Yeah, it's trying to fight, dude. Just let me out for break even on this. I'm trying not even be greedy about it. I'm trying to dump half the size, improve my average, and we'll see how this thing goes. Come on. Oh, there we go.
Order filled.
Okay, cool. Managed it properly. Updating risk. Remember, my average, don't think it's 71. It's actually 61 because of how I've been managing things. So it's going to look a little bit better, the value, than I actually am. And that's just because I've been like cycling in, cycling out. But now we're coming back to a region of support. We have support between 330 and 300, really. Look at all these wicks. So do I just want to go break even on it? I'm just going to give it a second. If I get my stop to 61, I'd be at least flat on the play. I'd take all risk off the table, which probably is the smart play as we're hitting support. It's just if I had that fill at 80 or 90, I'd feel so much more comfortable because this could easily bounce to 30, up to 60, and then vomit anyway. Why is my realized P&L changing? That doesn't really make sense, does it? I'm short 5. Well, now it's still... Oh, is it because of how it's sorted? It's not actually changing. It's because I'm being stupid. My apologies. But you guys are probably used to that, me being dumb. All right, so on MFF, remember we have different consistency rules we're working with. So this could just go for just over 1,000. Okay, so we'll go for 69. We'll go for 69. We'll go for 69. We'll go for 69. And then, of course, we'll go for 69. So that's the most I can go for on these accounts. If I have to get out earlier, if we bounce off this support, or if I move my stop to break even, of course I might get out. I wanted to know the numbers of the max because they have a 30% consistency, which is my lowest one. So I just need to be like kind of considerate of that. And obviously past that, it's a different story. Past that, it's a different story. The next ones would be like 49 or something. So, just updating those accounts individually. Oh, do I just want to go break even, go fishing? I mean, we're at support, which is why I keep circling back to this idea, because at support, 50-50 shot. You either snap support or you don't. And because there's a 50% chance that it bounces, like I could... Oh, do I want to save myself? Do I like that? I mean, look at support. That's probably okay. Now that I'm talking about it, and I'm talking about it so much, it does feel like because I'm talking about it, you might as well just do it. Maybe some of you agree with this, maybe some of you don't, but I'm just going to go break even. So if I can catch the flush, I catch the flush, but worst case situation is break even because I did that proper cycling. And hopefully this is like my one trade of the day. I guess I've been scaling in and out. I like to consider it rolling. Okay. So updated all of the risk as I should have. We don't really need this anymore. So no matter what, I'm break even. No matter what, your boy is break even. 1,000. And it looks like my break even's about to get tagged. So I don't even know why I'm doing this.
Order filled.
I gave it a fighting chance, but once again, got knocked out for break even, and I kind of don't mind it because why did I have to do it? Because support, support, support. What can happen at support? You can clearly bounce at support. So when I had the opportunity to protect myself, I thought that was the shrewd move. Now, knowing my luck, it could just be completely rejected here. And had I had a better fill at 90, well, yeah, maybe I could have given it some distance, but I just didn't have that good of an initial fill. So I had to play my position as I had it. It sucks that it didn't go, but that's trading. I'd rather protect myself at break even than like just hold on to a, like, I mean, look at this. Look at that bar. Look at this bar at 1020. Like it just some support, support, support right into resistance. If it gets rejected, maybe I have another opportunity, but I honestly think I played that perfectly. I really do. I think for my position, granted, I could have had a better fill, 390, 400. So I had a little bit of a chasey fill down here, and it's just because it went so quickly. But look at this. I'd be down. Like, I really do think I played that perfectly, and it's just what the market offered. The market offered getting out at break even, so I ended up getting out at break even. Sometimes the market's going to be really generous, and it's going to keep trending, and you're going to crush it. And then other times, you're going to get smoked. But why did we bounce? It looks like buyers stepped in right at 75. SPY picking up a little bit.
Order filled.
All right, we're giving it another whirl. 55, 45, 35. Oh, do I need to give this room to 410? It keeps like slightly overshooting 400. I don't necessarily like my risk being just below 400. I was attempting to once again play the VWAP rejection. This might be the time. 1, 2, 3, 4, fifth time might be the charm that it actually flips. I wanted to double check it with SPX, and I see it coming back up to resistance. So it's like, okay, is it going to get smacked here? We'll give it time. I have well-defined risk. It's a little bit more than I would like. I would have liked to dump half just to lessen my risk, lock in a little bit of the profit. But basically just seeing if the way with support was support, I'm seeing if resistance will be resistance. I feel like sometimes I wait for too much confirmation to get into the trade instead of waiting for the failure. I could have just played it here. My fill would have been 80 instead of 55. But sometimes you do that and it just runs so dramatically away from you that I don't know necessarily. I mean, I've done a lot of studying that on strategies, and some strategies of mine are better to do it right when we hit the value, and then other ones are better to wait for the confirmation. So it's not so evidently clear to me in the math. Why can't I combine these two trades? I thought I was, there we go. That should be now together. Okay, I can't really risk much more than this. I just need this to be a top of zone failure right there. Resistance, resistance. I need this to fail. Right at 400. What do we have going on? I see a big battle in terms of order flow going on right here, right at 400. Like I said, folks, most of this game is 50-50. It's just, do you have good risk reward? And I'm taking a 50-50 opportunity, trying to do it with ideal risk reward. I got a little caught up here at this value low. It bounced off of this 60, but I'm watching rejection, rejection. So, I mean, that's a good note for me in the future, especially with like doing these day trades. maybe just play it right at the region. Don't wait for the confirmation. And if it breaks the region, use that as your risk. I guess that's a thought. But I'm literally just, the thought is rather basic. It got rejected here. It got rejected here. Is it going to get rejected again? It also happens to be aligned with right here, this VWAP. Now, resistance, resistance, resistance might turn into support. That's totally possible. And then that means I'm absolutely screwed. So I'm watching the RTH VWAP at 84. I'm watching the next VWAP at 44. And I'm also watching the recent swing low at 51. My position is short. Full size position. I wish I dumped it to half size, but we're going to give it a second. We're going to give it a second. On the dump, if I get lucky enough that this dumps to 50, obviously I need to move my risk to the recent swing high. I don't see any other way around it, but that's a big if. I would have to be somewhat fortunate because we are in real time seeing pretty interesting battle take place right here. You see some serious players hitting it, hitting the charts. Some are bullish, some are bearish right at 400. Big resting order at 400. That might have been a short getting knocked out. You don't know if it's selling to open or selling to close, but someone was right here, knocked at 400, knocked at 400. I'd love to see it below 63. I'm still underwater on my current trade, which means I'm underwater on the day because my previous trades netted out to being break even. But maybe I will get lucky. Man, this fill, I should have been a bit better. That's a good lesson for me. Good lesson for me. Still trying to dump half. Trying to dump half at 45.25.
Order filled.
All right, just dumped half at 45.25. And as I said, okay, just trying to manage my position, not the best fill. So I got out of half. I'm going to be updating my risk. The risk is still a little wide, but hey, it is what it is. I'm just trying to figure out how to play it. We're coming back up to support. And see, this is what would have been so nice if I had the balls to play it at 80 or 90 or 410, or if I scaled in 5, scaled in. Maybe that's what I need to do. Instead of going in full size, the way I'm scaling out, maybe the real play is to go in half size and then the other half the size. If like I didn't mind this, but then I would have liked it also here at 400. And then I've gone like at my fill. Yeah, it would have been better. So maybe that's what I really need to do, is play half size, because I feel like I'm showcasing pretty well the half size of getting out, scaling out the way I just did. But getting in, I think I could also improve that. I do. I don't know do I really want to risk 585 on this? All right, let's update this ATM strategy to just be half. All right, I'm updating it, so I want to work on some scaling in and scaling out. Can you explain the debit spread I think you spoke of yesterday, selling the next strike or something? If you don't own the underlying shares, you need a bunch of money in the account. No, you don't, because you have the call under it. So a debit spread involves either 2 calls or 2 puts. So what you could do is, let's say you're bullish on Microsoft, but you can't afford the 500 calls. You still go long the 500 call, but then you simultaneously go short the 505 call. So when you're saying, oh, like I need the underlying, it's the synthetic position. It's because you're long the call at 500. So you would buy the 500 because you're bullish and you want it to go up. But if you can't afford it, you would be good in, like, technically it's cheaper. You are limiting your upside to at most the difference between the width, 505 minus 500. So you're limiting it to 500, but then you would sell the higher one. So it's a 2-leg position. you can still be bullish like you would buying calls. But then if you can't afford it, or if you want to lessen the risk, you would sell the 505s. Does that make sense? Is that within one or two orders? I mean, technically they're all separate orders. It's just some brokerages have an interface that sets up that it looks like you're doing it together. And with those, if it's like a margin required, they probably do require you to execute them together, because it's not like you want to just start off by selling the 505 because you probably don't have the margin in your account. And you might not even have the money in your account to go along the 500. But like, if we really get into like the market structure of it, it is still technically two different orders. It's just a lot of brokerages, especially because of the margin requirements and the risk, they probably want you to submit them together, and then you only get to fill if they're executed also together. This might be a higher low here. Am I getting screwed? We're just kind of going sideways at this point. So we're playing this upper range, we're playing this lower range, and I am betting on the breakdown. I think give myself a 10% edge instead of 50-50. We'll call it 60-40, because the S&P 500 is going down, the Mag 7 is going down, and the NASDAQ was going down, now going flat. So option flow is pointing down. And before that, 1 minute was kind of bullish, 5 minute bearish, 10 minute bearish, 30 minute bearish. NASDAQ, 1 minute's flat, 5 minute is bearish, 10 minute is bearish, 30 minute is bearish. So like looking at price momentum and looking at options flow, like I said, I just give myself a 10% edge. Instead of it being 50-50, I'm giving myself like a 60-40 shot of it breaking in my favor. And so, of course, you can be profitable 50-50, just you got to have good risk reward. And then it should be even easier for you if it's 60-40, but we might be in one of those 40% buckets for all I know. I think this view is a little bit easier to see it, but we're just wicking. Honestly, I could probably redraw this a little bit better at this point. I feel like this drawing was actually already pretty good. So you have support, you have resistance, and we are playing, the name of the game is wait until one of them breaks. And then if you break, you also have to have the confirmation, is it fake or not? Because we had some fake outs earlier. And now, like, dude, we're right in the range. Look at the EMAs. They're just going, like, literally nothing is happening right now. You just have to have patience. Like I said, because of the larger time frames, the 5, the 10, and the 30, the 5, the 10, and the 30, I do give the edge to the bears because of options flow. I do give a slight edge to the bears, but we know the current price movement, the current options flow, it can change. Maybe the bears are done and they want to, now it's time to really, obviously trends change. And will it change? I don't know. I'm more of a, just because understanding the trends in the market, most of the time trend persists, but that's most of the time. I'm not saying all the time. And obviously we've all seen it before. When trends have a clear switch, it can happen. And in fact, on S&P 500, we might be setting up for an inverse shoulder, head, shoulder. Found support, overshot it, found support higher, right back into this region. The NASDAQ is just fucking sideways. Right back to RTH VWAP. RTH VWAP is around 380. I'm at half size now. We're going to see if it does get smacked here. Obviously, if it breaks out, I have to just get out of this because I was playing for the breakdown of 300, which never, ever came. At least not yet. This is some crazy consolidation, without a doubt. Without a doubt. But patience. If you don't have a position, I would very much argue, for day traders, I would very much argue the right move is to literally do nothing. Just wait. Wait. I mean, I got involved into my initial position really on this breakdown, but this is the information I was dealing with at that moment in time. We went out, failed breakout, we smashed higher low. My first short was here around 330, 340. This is what I was dealing with. That was like the kind of core of my play. But since then, we have new information, and said new information is just chop. You have support, you have resistance, you gotta wait. And okay, I want to clarify this just because I think this is very important. Not even that many of you have been asking me, what is 240? 240 is the overnight low. Interesting target if it breaks down. Interesting target if it breaks down. the question is, okay, Matt, you're saying that there's support, you're saying that there's resistance, and you're saying that you have to have patience for one of them to break. What does that actually mean? So you notice how in the world of like content creation and teaching, people just say that, oh, like, oh no, just wait, just be patient. But then they don't get into like what that actually means. And you could say, Matt, does that mean I go short on the break of 305? Matt, does that mean I go long on the break of 414? Well, of course you could. That's up to you. Like, that's your life. And if that's your pathway forward, hey, I love that journey for you. Would I do that? The answer is no. What I like to do is if it breaks, I try to wait for the break of 305. If I don't already have a position, the break of it, then what I want to see is a retest. And I want to see support actually turn into resistance. And then I want to get in right here, arrow 1, 2, 3, 4, in between 3 and 4. That's where I like to enter. So I don't like to get in on that first break because it could be a fake out. And if you don't think that there could be fake outs, yeah, right here. Like if you applied that logic, think about what would have happened to you. Let me just move this up for a second. Think about this. If you were chasing this breakdown at 308.75 right here in this bar at 1020, you got wicked. And unless your profit target was less than 3.75 points, it failed. So like just this idea of chasing just on the puncture, especially to the bearish side, is very dangerous. It's dangerous in both directions. It does work out better in the bullish side just because of the nature of the bullish grind to the upside. So if you had to chase something, yeah, okay, you could. It's probably not going to end well for you unless you have other filters and proper risk management. It is better on the bullish side. Not that I think, like, I don't want to be the person telling you to not do it, because I do know of strategies that it could work and you could be net profitable. But for maybe the person who hasn't studied that extensively, I guess I'm just giving you the warning. Be really, really careful being the person chasing it, because we see all these examples of fake outs. So for me, I like getting into a quote unquote break after I have confirmation, right? Like something like this. Like it would look like the breakdown, the retest failure, and then you get to play it. And then whatever the height of the retest failure is, or the height of the previous one, those are all reasonable risk points. But what if it never retests? Yeah, you miss a trade. That's life. Okay. You're going to miss a lot of trades. This idea of like, oh, I don't want to miss trades. Fucking wake up, Buttercup. You're going to miss a lot of trades. Do you know how many things are trading on any given moment in the world? You've like right now sitting here, us chatting, we're missing trades on the Forex market. We're missing trades in the crypto market. We're missing trades on call chain and polar market. You are by definition missing millions of trades a day. You're like, so now you're using the subset of, oh, but what if I miss trades on the thing that I just happen to have open at that moment in time? Fucking get over it, man. I don't know what to tell you. You have to accept it. And I know it's kind of tough because like no one wants to miss a trade, especially it's of the thing that they're paying attention to. But there's no way to avoid it. That's just going to be an axiom of trading. You're going to miss shit. It is better to miss a good or a bad trade. It's better to miss a trade in a general sense than it is to get into a trade you should have never been in. When you say break, you're talking the actual candle or just if there is a new low wick? I just explained that whole thing. I just explained the difference between a break, a candle, a wick. It's not a break unless you have a retest failure in either direction, in my book. If you want to be super technically accurate, did you break the price level? Yeah, you break it on a wick, but there's a new cohort of people who don't use wicks and they just use the body, which I find to actually be kind of like fucking retarded, because what is a wick or a body on one time frame might be a wick or a body on a completely different time frame. So that concept, I don't understand it. I actually don't understand it in the slightest. We're like, no. I use the open and the close on the 3 minute, which on the 1 minute we have open and closes there, but then sometimes that aligns with the 5 if it's a multiple of the 2, but sometimes it doesn't. I don't understand that at all. Obviously, you want to use the wicks because that just in any time frame shows you the extreme nature to which price went. But a lot of these fucking ICT dweebs, they only want to use open, high, low, close, which once again, is just mathematically an extremely poor decision. It's an extremely poor decision because what might be an open and a high on one time frame might not be true on another time frame. It's so stupid. It's actually really fucking dumb. As if the arbitrarily most recent trade, just based on the time of the day of like, okay, if the trade executes at, what time is it? 10:40. If it executes at 59, it's important because it's a closing value. But if it executed at 55 and it was a new higher low, no, that doesn't matter as much. Arbitrarily, because it was executed 4 seconds before, it makes no fucking sense. Like, someone needs to make that make sense for me. As long as you're using the right time frame, it does not matter. There's no such thing as the right time frame. They're all just time frames. There's not a right or wrong time frame. There's a right or wrong time frame for what you're trying to do. The monthly chart has nothing to do for you if you're a day trader and vice versa. If you're a long-term investor, if you're looking at the minute chart, what the fuck are you doing? There's not right or wrong time frames in a vacuum. It's right and wrong time frames relative to what you're attempting to do. Like now, we technically broke the high of the sideways range, but that doesn't mean it's a good long. Exactly. Well, first of all, you wouldn't want to chase it anyway. You would want to see this resistance turn into support. The way we're rejecting. See how here we made a base, here we made a base, and then ended up failing, and we retested and we failed. You would want to see the breakout, the push out, the pull back in, a foundation built, and then it goes. Chasing the breakout, once again, if you chase this breakdown at 10:20, you got cooked. If you just chase this breakout at whatever, 10:39, you got cooked. And when I say cooked, I mean if you're going for more than a couple points. Like right here, obviously 414 to 418. If your profit target was 4 points, congrats. You just made 4 points. And if you do it with size, you could have made good money. I'm not saying that you can't do it. But that's kind of if you're micro scalping somewhere below like 5 points, yeah, that could be a viable strategy. Base it on momentum, base it on ATR, base it on the time of the day, look at the strength of what we're doing. That's fine. I'm just saying, if your target was less than 4 points, you're kind of screwed right now. If your target was less than 3 points, you kind of got screwed on those breaks. These breaks over here, same thing, from 59 to 66. So there were 7 points in that break. Wick. So, can you make it work? Yeah, maybe. Did I get stopped out? Not yet. I'm not at my complete pain. I wanted to actually see a kind of that retest to see if the retest fails or not. So I'm kind of giving it a second. I'm still in it. But remember, I already cut down to half position because we were so range bound, and I saw this tag as support, and I was like, okay, I got to manage it. But it's a little tough because we're getting into this zone where we're getting into another region of resistance. So the question is, do I give it this shot or not? Which, with proper sizing, you can kind of withstand that. We did break out of this, but it could get rejected here, come right back down. So I'm watching this. So we did have support. We did have resistance. Support became support. Resistance became resistance. Then support turned into resistance. This support held the whole time. And now we're seemingly looking at the halfway through this region, this little dot line, all these wicks back here between 935 and 945, that was all session VWAP. Session VWAP is currently printing at 457. I heard she had kids because she's 34 and convo ended there. Okay, that's an interesting chit chat you guys are having, but all power to you. All power to you. All right. I want to set up alerts here just so I don't miss anything. Okay. So SPX is doing a similar thing where we had support, turned into resistance. We're now trying to break. And it's also at this, it might be going for 700. Is Flow turning? Flow, not the biggest turn, but it's showing some life. It's definitely showing some life. But man, this is another reason of definitely why I wouldn't chase that. Look at the Mag 7. It's down and just turned flat. It's not turning up at all. The NASDAQ is turning up. The NASDAQ from 1035, it was down, flat, 1035. We're pointing up. call buying started at 10:05, but puts were being purchased as well until 10:35. Now they're kind of being sold. The recent spike high was 4:30. We really didn't get that retest. Depending on your time frame, you might count 10:41 as a retest. Patience. Patience, patience, patience. I just want to point this out to you that VWAP is here. Let me turn this over so you can. Oh, I didn't trade on MFF at all, apparently. So MFF is not currently live, which on this trade, maybe that's a good thing. But I'm watching. See how we were battling the orange dash line once again is RTH VWAP. We were battling, rejected, rejected, rejected. Now we're popping up to this next one. I'm wondering if there's a rejection there. And actually, MFF. Hang on. I'm trying to set up a trade copier just for the MFF accounts without completely messing up everything. MFF 72. MFF 72. Okay. Maybe a VWAP rejection. Do I want to do it with half size? MFF 72, no position there. And now we're on the right ATM. Yeah, I just didn't toggle those back on, I guess, after the break even because I set up a different profit target. So the MFFs never got triggered. How do you determine if you want to play options or own the stock, or do you only buy one over the other? I buy stock for investment and I trade options. So I just use them for completely different things. Why does this seem different? What's your VWAP coming in at? I'm seeing 37. Okay, this is because it's MNQ. So it would be silly to use those VWAPs because it's a completely different contract. We also don't need this. Could just be this VWAP rejection. So before, when we were ping-ponging between, I guess, just the intraday low and the RTH VWAP, before we've seen it a lot where it just ping-pongs in between one VWAP and the next. So wouldn't be so surprised if we bounce off of 380 and go right back to 440. We've seen a lot of VWAP just ping-pong sessions, and then sometime in the afternoon it breaks. I'm slowly but surely trending back to break even. I need some move here. 380. I mean, what's happening? Okay. Before, when people were saying, okay, like, how do you know if the break, it would be, I mean, I don't want this to happen because I'm currently short, but if I was looking for a bullish position, this is what I'd be looking for. I would say, okay, we had resistance, resistance, resistance. It broke above it. Now we came back into it. Now I want to see the higher low. I'd want to see a higher low. And as it comes out of that, great, I could take that long and I could risk this recent low. That's how you do it. So you don't chase this. We've already explained and shown you today why you don't want to chase unless you have a very small profit target. You want to see if it's a fake out, because, I mean, and this, honestly, this got close enough that you could call this, or it just got rejected. You could just say, hey, kind of wicked into it. But you'd want to see life. Like, you'd want to see it bounce off the 50 EMA, the whatever, 20 EMA, the 100. Like, you just want to see that V shape in here. You'd want to see a higher low, and it takes out of this region and goes to the next one, which this could just be a fake. You could call this a fake out, or you could call it a rejection at resistance. That's kind of up to you. Damn, I did not get the trade on the MFF's accounts, but I'm still in my other position right here. I'm still in at 55 at half size. I did lock in some of it, which I'm happy I wasn't greedy. I did move my target to 35, and it only got to 29, so actually it would have worked. Oh, but this bounce would have scared me a lot to 87, a 30-point bounce. So it did get to my reach target, but on the first one, it only... Nope, 34. It would have filled. Never mind. I should have been greedy. Scratch that. my recent conservative nature actually screwed me. Matt, I don't even chase my liquor. Fuck that. No, I've been trying to not drink lately. I've been trying to run more. I've been trying to work out. I've been trying to get better sleep. And I noticed for me that if I have alcohol on my Whoop, my handy dandy Whoop tells me that my sleep rapidly becomes atrocious, like legit horrible. So I've been trying to be better about that type of stuff. And not so easy when you have the high stress nature of degenerately trading each day. I'll be completely honest. Question for those of you who trade and have had a period in your life, a season of your life when you drank and a period of life when you didn't drink. Did your trading stay the same? Did it improve? Did it get worse? I'm curious. Yeah, better role model for your child. I also kind of think that of just like you have more energy. Like I think for various reasons, and I'm not against drinking. I'll go back to drinking. I'm not one of these people who's saying I'm quitting. I'm just saying I want to take a pause and kind of get some actual measurements on my like life, whether it's my trading accounts, whether it's my fitness. I just kind of want to get like a baseline. I F everything up drinking, 100% degen trading while drinking. Why drink and drive when you can smoke and fly? Touche. Touche, touche, touche. Is it snapping? A little fake out, folks. I smoke on my red days, but also smoke on my green days. That's fair. You're either smoking in celebration or smoking in anger. Hey, to each their own. I'm not here to judge. I'm not here to judge. Urine leaking ad. You guys just got an ad for your urine leaking? By the way, if you guys want to support me, if you like Tradeify, don't forget to use that code Goonie on Tradeify. I'm trading those right now in front of you. I like them. I trust them. Thus far, everything has been great. 40% off. You can get a bigger discount if you buy those bundles of 5. In fact, you can get all in on a 50K account, no activation fee for less than 100 buckaroos. Woohoo, 7 accounts blown. I'm sorry, man. Size down. I legitimately think a good rule of thumb is whatever size you're trading, you should probably like start by trading half of that. Like whatever size you're at and you're like, fuck, like if it's just not working for you, just cut it in half. I was trading 2 NQ, not doing well. Blew out a lot of accounts. Went to 1 NQ. That didn't go well. Well, it was going well for a while, but then just stupid bad beats on my part. So I was like, okay, let's size it down again. So now I'm trading 1 NQ, but I go half in and half out. Even if you just do it for like 2 to 3 trading days, do it for 1 trading week and see if it works. Like worst case scenario is like, no, you did fine and you would have made double the money. But best case scenario is you find sizing that like lets you really, I guess, represent your concept of where the market's going to go. So like, what's it hurt? What's it hurt for 1 week of your life? Start it today, start it tomorrow, and go till next week. Trade whatever you're trading, especially if you're having a rough time, trade half of that. Cut it in half. And see if you can just maybe manage it better. Not only the numbers of when you're down, but maybe the psychology of it. Maybe it gets you into some scaling tactics. Like you never know the doors that it's going to open. And like I said, the worst thing is that you had a stellar week and you would have just had double the money. That's it. Not that far to fall, team. 1 minute on ES is holding. We're right at this 90 level. Okay, so remember before. Well, I was showing you on NQ. This is, if I was trading the S&P 500, this is an interesting formation. It breaks out, pulls back, looks like a higher low. If I was trading ES right now, I probably would have taken that for a little bit of a ride. I probably would have taken that bullish setup, which is a little rough for me trading NQ because they are highly correlated. But I do see the options flow. I'm still giving the edge to the bears because options flow is not good. And I just know there's a huge wall at 700. All right. We're dipping. We're dipping. So for whatever reason, I forgot to execute the trade on MFF. So that sucks for me, but all the other ones are in the live position. And I finally got back to break even. Well, I was break even for a second. For one darn second. That's not actually my risk, to clarify. I'm just moving it down so it doesn't distort the chart. But if it held VWAP at 436, I probably would not be a happy camper, and I'd cut it from there. But I just wanted to move that down. I keep the risk on the screen just to remind myself not to let it be complete. Hang on. This might be my time to shine. What's the fill? The fill is at 56. What time is it? It's a 10:55. 10:55. So we came fake out, breakout. You could call it rejection at resistance. It's one of the two. Comes down to the 50, tries to bounce. Comes down to the 100, actively trying to bounce. But is the cloud just turning? Like I said, options flow is not looking the best. It's not looking supportive for the bulls. Definitely not the Mag 7. The Nasdaq had a sign of life, but then right there it turned at 10:45.
Order filled.
All right, I'm now matching the position with all of them. So I'm trading half size. Which probably means, you know what I'll do? Should I keep them separated? So I'm trading half size on all the accounts at the moment. Do I want to go back up to full size? SPY's showing a little too much strength. And it got hit. I'm at half size. Do I want to go full size? Do I want to scale in? Decisions, 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 my friends. What would you guys do? Would you add to the short here on this fail? Or maybe that's just a wick, but I'm seeing a fake out breakout here between 1039 and 1047. I'm seeing it get pushed back. Even if I could play it to 330 and dump the extra half at 330, triple down. I want to learn more about your scaling tactics. I recommend you start off by watching every Spider-Man movie. That's where I first got into the concept of scaling, like a creepy crawly spider. And then from there, when you feel confident and versed in all versions of Spider-Man, I would then move on to the old Anaconda movie and the new Jack Black remake, because you want to study the scales of that snake. So start with the Spider-Man movies, move on to all variants of Anaconda. And then you'll probably be at the level that I'm at. Then you'll feel a little bit better about life. Damn, that ad. I don't want to. What is this low? 330. It's a living. I don't trade like Matt, but I learned the basic principles from him. Well, if you haven't been, am I getting faked out? 366. It's almost 11, which means we have to dip soon. But I guess you guys know my risk. You know my reward. You know how I'm playing it. I actually, if this little pop fails here, rejection, 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 kind of a break, rejection, could be a fake out. If this fails here, I'm actually happy to add and go to full size, which is one of the advantages of being able to like scale in and scale out if you're trading with proper size. I think we all know that. It's just more of when you're first getting in, we all have this like unfound confidence that our current trade's going to work. So you might as well go max size, where generally it doesn't work like that. And if it does, whatever, ride a portion of your position to your target and it's okay. It's safer to assume that you're not going to hit the trade than you will. Safer to assume. Well, I was break even for a quick second. I was gearing up to add to the short. If we cracked all these wicks here, if we started to crack them, I was going to add. But now we're just in resistance. If it fails, I'm definitely adding to the short. If this fails, I'm adding to the short. Maybe right at 400. Should I put the order at 400? But if I did that, 430, that's kind of far away. So before, when I was talking about waiting for confirmation versus just doing it at the levels, that's not too bad. Apparently, I'm waiting for confirmation rather than just doing it. We're going to see. It's now pushing the upper bound. I mean, that really tested VWAP and bounced off of it, RTH VWAP. So we're above RTH VWAP. We are below session VWAP. Dude, this is just... Yeah, so we're above the orange line, which is RTH VWAP, but we are not cracking session VWAP. So kind of becoming a VWAP ping-pongy session. Resistance. Oh, whoa.
Order filled.
Okay. What the fuck? Okay, these got knocked out. My MFFs got knocked out. I guess I had a different risk. What the fuck was that? Okay, so those got knocked out. That's at 72. My charts are... What is going... Did you guys see news, perhaps? News, perhaps, perchance? Is the 10-minute 11:02. It could be a VWAP. I mean, we came right into this zone. What are we doing? Let me know if you guys see it, but if it fails VWAP, I'm going to add to it because we're right in a region of resistance. I don't have to carry that much risk on the ad. Wow. Does anyone see any news on that? Let me know, let me know, let me know. Let me know, let me know, let me know. Little fake out. See right there how it just wicked.
Order filled. Order filled.
What was that? Does anyone have the news? Profit taking, more buyback, percent on bonds. The buyback could be more than 4 billion. More buybacks on bonds. Fuck. I see why the market popped. The question is it going to believe it? Is it going to believe it? 57. Okay. I'm sticking my plan. I went short in resistance. A little unfortunate with the news side of things. But maybe I could get, maybe I'll be on the right side. Maybe other people see this as resistance. I think if it cracks 414, cracks 400, I'm good. I'm just trying to play this back down to the other VWAP. I'm trying to basically play it from 436 to 384. Folks, unfortunately, it is past 11, and generally in this live position, I would stay with you, but I do have to hop on to Tradeify live trading. So they have a whole channel, once again, Tradeify. So I'm going to hop on their live program in a couple minutes here, going live at 11:30. So I need to prep up for that. Shout out to Tradeify, code Goonie, 40% off, a bigger discount if you buy the bundles of 5, but I'm about to go live. So I will see you guys at 11:30. Once again, Tradeify live trading TV. You could just see it on YouTube there. But you guys know my position. I'm short. The logic is literally just going short at this resistance. Some of these I'm back up. And honestly, it's not that bad. Do I want to carry half size? 84. That's probably the right move.
Order filled.
Hang on. No. Everything's going too fast. Fuck. Okay. Hang on. I'm trying to move as fast as I can, but I fucked things up. I am short 5. Okay, let's buy back 5.
Order filled.
Cut the size in half. Okay, so size is properly cut in half on both. I am positions. I cut my size in half. I was up 10 on all of them. Put the size back in half just in case there's a bounce off of RTH VWAP. So, hey, stuck to the plan, had the plan, and now we're to a point where I can like manage it better with reasonable size, which is kind of, folks, how you win the game. It's kind of how you win the game. So there. Sometimes it works to go short at resistance. A little unlucky, but remember, in terms of like luck or skill, I think this is an important thought that I'm going to leave you guys with. Once again, we could chat about it more on Tradeify Live TV. It just came up to resistance. And was it unfortunate that I was short when they announced it? It was unfortunate. It was. But also, if you trade with proper size, you can still withstand that. If I was trading my normal 2NQ, I would have been blown out and then would have come my way and then I would have been pissed off. So this beyond strategy, like maybe you like the strategy of long or short at resistance or support. Maybe you do or don't agree with the strategy. But the point is regardless of your strategy, if you are trading it with proper size, you can give yourself that opportunity to survive the noise of the market. I was short at, I don't know, 50, 60, 80, somewhere in here. Then because of news, it popped. If I was trading full NQ, I would have been blown out. But because I had proper size, I gave myself the chance to add in at resistance, came down, dumped it, and now I'm fully back green. Awesome. Dope. I hope that today's live session and my reasoning, but also literally showcasing in real time live trading, the getting in and out with appropriate size, it's far better than anything else. It's far better than anything else. And you guys got to see a great showcase of it today. Anyway, that's what I have for you on this show. Like I said, I'm going to go on Tradeify Live. I'm going to be with Joey. That starts at 11:30. Shout out to Tradeify. They are the partner of today's show. Use that code Goonie. And if you want to trade with me, if you want to learn from me, if you have questions for me, that's exactly what the Goonie Trading Discord is for. It's in the description of the video, or you could go to GoonieTrading.com. You could sign up there, or if you have questions, there's also a contact page, and those emails come directly to me, not like an AI system or an employee or anything like that. So if you want to like contact me directly, GoonieTrading.com does have that contact page. That's what I have for you. I appreciate all the vibes. I'll catch you on Tradeify Live. Other than that, the market is still effectively range bound. This is a good day to literally walk away and do nothing. If you feel like doing something else with your life, it's just not a nice trending day. So whatever it is, I promise you, if you're having a rough time, size down, cut your size in half, and things will probably start to improve for you. I appreciate all the good vibes. I'll catch you guys on the flippity flip. Peace.